The NBA.com. This is John. This reports for the 23rd. Well, we're starting off the morning week after, move up to the high because, well, back and forth with the whole war narrative and the ever changing, the way they see it, ever changing policy. But, it's an asymmetrical warfare. The reality is you can see who the victims of the conflict really are. Europe is already beginning to start canceling flights and that because they're running out of jet fuel, which they say is going to threaten the U.S.'s ability to conduct a war with Iran simply because there are not going to be enough jet fuel for their jets to go and do any bombing and stuff. That's a bit more suspect. The reality is the crunch is going to be starting to be felt in Europe, and there's no way around it. And the clock has run out, so to speak. So now you're going to get an exponential effect from European countries, not to mention Middle Eastern countries, and then in particular in Iran itself. The big winners in this strangely become the U.S. and Russia. China, suffers as well, which is why they were trying to do their little back channel deal, supplying, chemicals and stuff to Iran, trying to avoid the embargo, and that was their, way to maybe get some more oil. Now, China wisely had pre-stocked prior to the war beginning, so they're not in bad shape. From a reading standpoint, you can see that we're starting to fade a little bit here. We have the potential of moving below 33. That would be a little bit more of a drawdown. You still only two. You're not going to have a major daily effect. What you're going to see is our 50K that will give you your first triggers, and then it will continue. And literally what you're looking for in that case is that MBI weight spike, and close to coming over the red with in the magenta that moving under that could be a sustained decline. So while it already signaled DOC spread for a negative, you're watching this to see if that continuation is going to drive you to the 0% and lower. And then once you get into the lower, then of course, then we start going back over here to the left side of the chart, and we start looking at the positive extremes for all the different retrace values going across the different positive extreme levels. And there's quite a few. So there's no shortage to look at. When you look at it from an intraday standpoint, yesterday was pretty much mostly upside. It wasn't until a little bit later that we started to get some back and forth going into it. Then towards the end, rallied it strong, got a bunch more call buyers into there so that they could just like literally hammer them, and that's what the post market has done. Some people might blame it on earnings things, this and that. Of course, those are all going to have realities to it. How much impact? The reality is everybody knows where inflation's headed. The market is going to have to elevate to some degree to cover that loss. So it's always been a mixed match of, as long as the recession isn't the word being used, then you just get this back and forth that has a lot of uneasiness, because usually the drawdown moves are substantially stronger than some would expect. So that way we should look at the NASDAQ first. So similar, but stronger. You can see it hasn't broken down. So that's where you have your strength. You also get check out gold pricing, which is also a positive for maintaining that strength. And I know it's confusing for a lot of people because they think, oh my God, the market should be collapsing. No, what should be collapsing is the euro. But again, this narrative that the U.S. is the one that is suffering in that, it's interesting because they were about to deliver, what was it, a cache of $500 million in cash to Iraq that they suspended because obviously they're having issues with, the Iranian militias that are in there, attacking the U.S. bases that still remain. They're not getting their cash, and that's going to be a problem. So, it's for the oil that, they trade, but still, you start to make people cash strapped and things become very different. Well, for a euro, they got to buy dollars to trade. And, it was convenient how after Hungary, got rid of Orban, that magically the pipeline that, the Ukrainians said was damaged is now fixed. And they can supply the oil from Russia into Hungary, which will allow them to get their $90 billion loan for the war. And then Russia promptly said, you know what? No, we're not going to supply any more oil to it. So that's kind of funny. And those, not funny because it's real effects on people's lives, but still, oil climbing back up, we're actually pressing, again, this reality of you've got a differential between what you see from this contract price versus what's actually happening from a delivery cost standpoint, and it's only going to get worse from here. And this is going to be the impetus for back and forth. Now, of course, Trump extended the ceasefire, which just happens to correspond to how long it's going to take for the next carrier to get into the region, because clearly they're having problems with allies who aren't going to let them transport or fly through their airspaces and stuff, which, crazy as that is, I think that the list of persona non grata is probably growing within the Trump administration from an ally standpoint, not proving to be such. Gold suffering a little bit on the decline here, but again, I think that's a little specious. When they start to see the inflationary impact of it is when that will start to make a significant move change. And of course, Bitcoin, of course, rising still. The suspected likelihood is that any of the traffic that's transiting the Hormuz right now is because of payments. So it's not supposed to be that way, but that's the whole point of being outside of regular currency, and it's exactly what Bitcoin's doing there. So yeah, from a reading standpoint, it's not horrible from a broader perspective, but you're not exactly out of the woods from a dynamic standpoint of volatility. But we're still getting the buys that reflect, and then when they exhaust themselves, the sell signals are pretty clear. It's just the ranges are probably a bit more than some people like, but that's why you have to have the indicators so that you stay with a trade regardless of what that volatility looks like, so that you're not getting whipsawed out of it, because this is what they're doing. They're hunting people's stops on a regular basis, and it's becoming very effective for them, so they're going to continue to do it. It's easy money. As always, know anything relevant, I'll put it on our team chat. Have a good one. Trade well.